Oh, hi everyone, and welcome to another live stream. Those of you who've been coming along regularly will know we've had a little bit of a break, just under 2 weeks. We went off to Italy for a short holiday, but we're back now, and so we will be back on a more regular basis. Those of you who are coming on live, welcome. And I know a lot of you watch the recordings of these, so whether it's live or you're following the recorded version, it's lovely to have you join us. What are we going to do today? We are going to look at the Forex market, and I think David is also going to be looking at Bitcoin later as well. Forex trading, as you know, is hugely popular for a number of reasons. One of the reasons, I suppose, is because it's a very easy market to access. You don't need a lot of money. There are hundreds of pairs that you can trade. It trades 24 hours a day, 5.5 days a week. But there are a couple of things that you do really have to be aware of, and one of them is that although it's a 24-hour market, there are three distinct sessions. We've mentioned this before, but it's worth repeating. So whilst it's marketed as you can access it at any time, day or night, which is true, you do have to be aware that there are these three very distinctive sessions. Each has their own drivers. They have local drivers, they have global drivers, and you do have to be aware and almost schedule the time that you are going to be at your screen because you really do want to maximize the periods when there is the deepest liquidity, but also be aware that if you come close to when we have what we call these crossover periods, where you have a new bunch of traders going to be joining in, a new financial center joining the market, you are going to sometimes you have a bit of a pause. And if you are in a position in one session, for example, in London, Europe, and we're coming up to the open of the US session, you will find often that either it will go into consolidation or reverse completely, and then perhaps carry on in the original direction. So if you're a short-term trader, please do be aware of that. Now, what this also brings me is to one of the questions we're often asked is, can you approach this market perhaps from a slightly longer term perspective? Look at maybe the daily charts, the 4 hourly, even the weeklies, and the monthlies, and perhaps look to put on a trade where you're not scalping, you're not looking to close out in a very short period of time. And the short answer is yes. But there are a couple of factors that you do have to consider and bear in mind. And that is, first of all, depending on the pair that you're going to look at, and we're going to look at a pair which has, from a short-term trading perspective, will probably have a wider spread. So assuming that you're going to, you've got your choice of pairs. If you're going to trade something like a cable or euro dollar or dollar yen, pairs that have tight spreads, that's not so much of an issue. You can trade, you can hold the position, maybe days, maybe sometimes week. But you do have to check with your broker is whether you will have to pay any rollover charges or whether the broker will have to pay you. And that depends, and it's based on the interest rate difference between the two currencies, i.e. the two countries themselves. So that's the very important thing if you're looking to trade those pairs with very tight spreads. Now, the reason for looking at the longer term timeframes for pairs such as the pound Aussie, which is actually one of my favorite pairs. I haven't traded it recently, but I have in the past, because it's a cross pair that when it does move, it can produce some quite extraordinary moves, delivering a large number of pips. You're not struggling to make 10, 15, 20, 30, 40, 50. You are looking at sometimes handfuls in the hundreds. And you would think, oh, great, then I will trade that on a longer term basis. But again, spreads probably won't matter so much because you're going to be holding for longer. But the second factor that I mentioned, i.e. how much is it going to cost you to hold the position? That's really what you have to consider. But if those two factors are in your favor, it's a great pair to look at. And what I'm going to do, I'm actually going to share my screen, because the reason I've chosen it at the moment is because these two currencies are coming to an important point, or they're trading at a very important level on the slower time frames. Those of you who know us will have heard us speak many times about the importance of the levels that we have on the slower time frames. I'm talking here right up to the monthly charts, and if you've watched any of the recordings of the previous sessions, you will have seen how I mark up my charts, both in futures and in Forex pairs, and obviously on stocks as well. Because when an instrument, in this case it's the pound Aussie, approaches a level that is of significance on a time frame such as the monthly chart, you are going to get a much bigger reaction that you would normally get if it was simply trading some distance away from one of these levels. And the reason I've looked at the pound Aussie is I've got the 5-minute chart here, but I'm actually going to start with the monthly, because this really tells its own story. And here I've got let's take the Camarilla off, because it doesn't work it works on the monthly, but it's a bit scrunched up. Let's have a look, take that off there. Okay, let's see if I can just expand that a little bit. There we are. I've only got the data to 2016, but hey, that's almost 10 years. That's more than we need at the moment. And what I said before, this is the monthly chart, and we can see here that when this pair moves, it really does move. And you just look at the size of the candles, and that is also reflected in on the dailies and the faster time frames. But the reason I want to consider it now is because this blue line here, I've actually put myself. We can see, well, we've had, what you call that, a huge double top. Now, what's interesting is this candle here back in April. Nice, huge shooting star. We've got a big wick to the top, and you would think, oh, great. That is such a strong signal. We saw it over here as well, and you think, lovely. Now, no, I wouldn't say quite a triple top, because that really overshot it. But let's be generous and give it a bit of flexibility in terms of a chart pattern. And to look at that, certainly on a monthly chart, you think, oh my goodness, yes, there is weakness there, by virtue simply of the fact of this huge spike to the top of this candle. But what's interesting is the volume underneath it is really nothing much to write home about. So whilst from a price perspective, that would certainly not set the alarm bells ringing, and certainly think, well, maybe, this is going to have a major reversal, because we look back here and it's more or less in that kind of area, although I do accept it has, overshot it. It didn't actually play out. It went higher, but the volume was lower. And then do we have that? What do we call that? Well, is a hanging man. We also have a pivot. And then we've had not a big fall, but a fall nevertheless. But the interesting part is where it has fallen to. And this is where I have put my level, which is at very approximately 2 point. It's just over 2. So it's a nice round number. And it paused, it reversed back up, and it's actually trading around this area here. Now, the other factor to consider when you are going to be considering a position on holding for a longer time than other than 5 minutes or half a day or a couple of hours is. We then have to look a little bit more closely at the fundamentals for each currency and also what the central banks are up to. And these two central banks, it's very interesting because we have a BOE interest rate decision later on this week, followed next week by the RBA. We have to do a little bit of research and go and investigate what the respective central banks have been saying. And certainly for the RBA last month, when it was their interest rate decision, the consensus was that they would not be cutting as aggressively as they had been. So their cutting rate cycle had come to an end. And that would explain why we had a fall. We had a weakening of the pound. We had a strengthening of the Aussie, because ultimately in Forex, other than the day-to-day oscillations that we trade and take advantage of, what we're actually looking at are the economies of two countries, what the central banks are doing, how they are managing their monetary policy. And that has a much longer term influence on the price action. So it was no surprise to see that. And of course, what is happening in the UK, whilst we still have inflation, what we actually have is stagflation. And whilst the central bank can try and hold the line about holding on to higher interest rates, with the economy being having a very low productivity rate and all the other problems that we have in the UK, the market perceives that to be not good for the currency. From a central bank perspective, a currency, higher inflation, higher interest rate usually leads to a stronger currency. There is a tipping point at a point where it just gets completely out of control. So if you were going to look at this pair and think, right, let's see if there's something that potentially there that I could hold for a number of days, we do have these two events coming up. And isn't it interesting that at the moment it is trading at a very key level, significant level? Often happens. If we move down to, say, the 5-minute chart, well, how is that actually played out today? And this is where, that's the monthly. Let's go back to my other chart down here. I don't quite know why. What am I doing? Oh, I don't quite know why the monthly one keeps coming up there. The 5-minute. There we are. That's it. There we are. Hold on. Hold on. Let's do the minute chart. I think I had the minute chart on here. Let's have a look. Let's have a look. Look. I'll go back to the 5-minute chart. There's a lot of candles on it. There we are. There we are. Where are we this morning? Here we are. And this is what I was saying about on the faster time frames, is being aware of what happens at the start of a new session. And by a new session is when you have a new financial center coming into the market. And on this 5-minute chart here, where we have 8 o'clock, this is 8 o'clock our time here, is the start of what we call the London session. And just prior to that, as you see, we had a nice shooting star, a ton of volume underneath it. It did pull back. You had a down candle. Volatility trigger was triggered for in volume there. And this is a sort of what Dave and I call a classic trap at the open. You see it in all instruments and all markets, but I don't think I've ever seen one quite so clear as this one. You have a shooting star, lots of volume underneath it. It's 8 o'clock, lots of new traders coming into the market. You think, great, time to go short. Yes, you do, but fall of volume and what happens when volatility, you always get volatility at the open of any new market. This indicator tells you that you have the volatility because the price is outside of its average true range. I've heard this kind of candle described as a kind of master candle, as a candle certainly to pay attention to. You will find the price will retrace into the spread of the candle. So you look at that, you think I'm going to go short, you go short, don't stay in you're hoping to stay in at least more than 5 minutes. And what happens? This is triggered back into the spread of the candle. And then we expect one of two things. We expect either a continuation, or more than likely is a congestion within the spread of this candle. And here we have here until we get the price direction. And the price direction can take however long it takes. At the cash open for the US market, the direction may not actually be established for at least half an hour. Now, so with this one, we actually had to wait until, where are we? We have a little hammer candle here. What we do with this candle is we can actually use the candle as for the high and the low to give us a kind of range. And always, that's why it's called the master candle. So we look back on it and we think, okay, well, we can see here, didn't break through there, but neither did it fall through there. So you could say, well, is it likely to be more bullish or bearish? You really can't say. You just have to be patient. And then we look at the volume and see what happens with the price action. It goes into a consolidation within the spread of the candle. And then as soon as it breaks through, look at the volume that's accompanying it. Because whenever you have levels, significant levels created by a candle such as this, you need volume to actually push that through. And that is actually led into a rather nice little trend higher, as we can see here. It goes higher, and then pulls a little pull back there, more there, and there we have until we have a sort of that. If you put that candle over that candle, you have like a shooting star candle. What I also use for levels at times like this, I use our Camarilla, as I've explained before. The way we've developed this indicator through quantum trading is on time frames up to but not including the hour. They refresh every 24 hours. On the hourly chart and above to the day, you have the levels for a week. So you have daily levels, and you have weekly levels. Then you have the levels that you put on your slower time frame yourself. And it's a case of seeing what the price action is doing in the different time frames. Is it approaching one of these levels on a slower time frame? Because levels on the slower time frames always carry more weight. Let's just see what the Camarilla says. Here we are. There we are. Yes. Now, what happened here? Okay, lots and lots of volume to take that over the R2. Of the levels, the third and the fourth are certainly, I would say, they carry more significance. I don't really know why, but they just do. Price seems to pause at that point. They seem to congest at those levels. And you always find that if they need to go above or below, you always need that little bit of extra fuel, as it were. But that certainly pushed it off the R1. We can see here quite clearly. We can see the candle here, our master candle, our volatility candle, actually does stop dead on the R2, just below the R3. And with levels, by the way, you do have to be a little bit flexible. You know, they're not rods of steel. You just have to give them a little bit of a leeway. But you can see here how pretty much they do hold. And we've got that little burst coming through, which took it through there. Then you get to there, and you can see what I mean. It does get through, but it comes back to retest. And what you always want to see underneath the candles that are going up, you want to see wicks to the bottom of the candle, because you know there's a little bit of impetus in there and a little bit of buying. And in fact, having said that, both and that together is a shooting star. Look where it stopped. It stopped at the R4. Now, if we look at the hourly chart, just to see, well, how does that is there another reason why it stopped there? And lo and behold, it actually coincides with the R3. So when it got there at that point, this is the candle from this morning. This is the 9 o'clock candle. We can see here this nice big candle up here. We saw why it moved higher once it cleared the volatility candle, got through on the faster time frame on the 5 minute through the Camarillas that we saw there, and then suddenly it seems to just kind of stop dead. Well, if you go up to the hourly chart and you see it's hit the R3 and it's behaving in exactly the same way as I said it would. It's got there, paused, and it's had a little reversal. So if it's going to carry on higher, it's got to go through this level here, which is at $2.05. So that's on the short term charts. I know the spread on the pound Aussie can be certainly nothing like a euro dollar or a pound dollar, but if you've got a broker that can give you a decent spread, it is worth possibly taking these trades on, as I said, even the 5 or 10 minute chart, as long as the spread isn't going to go against you. On a longer term basis, it is at a very interesting point, as we saw on the monthly chart, and really depending on what happens or the market reaction to the two major central bank decisions, where I said we have the BOE on Thursday and we have the RBA next week. It might be worth seeing how it reacts, because if it does, if the pound does weaken significantly and the Aussie carries on higher, you could be looking at a really nice move to hold on to, not just on a 5 or 10 minute chart, but maybe for certainly for a few days, if not a week or so. But depending on also the rollover charges. Now, all this, the VPA, everything I've said that you need to know about the fundamentals and the macro to do with the currencies is all contained in our education program. We have programs. We have one specifically for Forex, and we have one for stocks as well, because it's all the stuff you need to know. Not immediately. We all start with a chart. We all start very simply, chart reading, chart analysis, hopefully with volume price analysis. But if we want to take our trading further, then we have to really understand what is going on behind that price action, the drivers for that price action from a fundamental and macro perspective. And details of the education programs are actually on the link below. And if you want any more information, you're more than welcome to send me an email at anna@annacouling.com. Always happy to answer your questions.